Hello, Maverick traders, and welcome out to your currency recap. This is Arkit here, and let's break down today's market price action. It's a Tuesday, December the 19th. Let's get into it. Let's take a look at what's happened in the markets, take a look at our currency baskets, and talk about upcoming trade opportunities. So let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So looking at our market analysis, let's just jump into the headline here. As you can see, the first thing, markets remain strong. So the headline hasn't changed. The only thing that we're expecting a change from was Bank of Japan, and there was no change. So we saw the Japanese yen fall more than 1% on that news. So that really killed the expectation for a big blockbuster move in the Japanese yen. So that was a bit of a highlight for this week, and that's now behind us. Now let's take a look at the performance today. You can see the Japanese yen was the biggest performer to the downside, 1.36%, and followed by the US dollar. Now, on the positive side, we're seeing the money going into the Aussie and Kiwi. Again, seasonality wise, this is where money likely to go into. Remember, money has to go somewhere, and it's not really going much in the European currencies. The Canadian dollar is kind of right tucked in the middle there. So I think at this point, we just need to focus on Aussie, Kiwi, and the dollar and the yen, those four currencies in the coming days ahead. Now, let's take a look at the broader markets. The S&P, again, continue to add on to the gain, 0.59%. World Stock Index also up 0.75%. Cryptos are down. Again, we're seeing that momentum being over for the crypto. Gold is up. And again, oil is up nicely as well. So again, markets are likely to do this in the next few days until the year end. And this is why we talk about trading the sentiment, trading the seasonality patterns. And that's exactly where we are. And again, we're not expecting any change. Looking at the crypto markets, again, it seems like the momentum is over. And right now, Bitcoin Cash, again, not really seeing any outperformance anywhere. So I think we just got to stay on the sideline for the cryptos for now. So looking at our outlook, again, we're sitting at a +3. That's a very positive score. Again, take a look at the market price action. We are melting up. This is a term that we use when the markets are, sort of continuing to move in one way. And that's exactly what we're seeing. And remember, this is also adding on to the 10% plus gains that we already had since November. So melting up again, market looks extended, but they just keep running. That's just the way how this market is going to move, I think, as we go into the year end. As there's not a whole lot of people want to sell because of the tax implications, and there's no selling happening, and fund managers are only putting money to work. So that's just the kind of a recipe that we have behind this melting up here. Now let's talk about the schedule. This week, like I said, in our currency room, the Bank of Japan was the biggest focus that we had this week. Again, going back to 2022, we had a massive move, 4% move just in dollar yen. That's not the case this time. There was no change from Bank of Japan. So we see a bit of a reversing those course that we've seen in the last week and a half on this positivity around it. So outside of that, we had the Canadian CPI, again, a little higher, but that was not a market moving, movement for the Canadian dollar. We still have some data for the rest of the week, but you got to realize that unless those numbers comes out way above or below expectation, probably not going to get the big move. Maybe you'll get a move 20, 30 pips here and there, not expecting a move like what we saw today where the yen moved more than 1.5%. So just realize that that is the market that you're in. You're not expecting changes, not expecting a whole lot of movement. And we might just see a little bit back and forth, but that's about it. So I think market sentiment will prevail and kind of carry the markets for the next few days. So let's get into the currency analysis and take a look at velocity scores. And looking at the velocity scores, you can see again, Aussie Kiwi, that's where the money's flowing. I know Swiss franc is at a +2, but we are so not seeing the other European currencies being really strong. CAD is right in the middle as well. So really, it leaves us with the dollar and yen. I know we were focused a lot on yen dollar short, but I think at this point, we can put the yen short in the same mix as well. So let's take a look at possible trades ahead in the next 24 hours here.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
And as we discussed, both the Aussie and the Kiwi against the dollar and the yen. So let's just start with what the dollar yen is doing. So you can see the dollar yen has been clearly in a downtrend, which means that if you were shorting the dollar in the last few weeks, has been better call compared to the yen. Is that about to change? Well, you can see that we are still below the moving averages. We did sort of came up to that moving average there and sort of pull back. So if this stays this way, I think then yen short is probably a better call. But if this turns lower, then the dollar might be a better call. So if you take a look at the dollar basket and the yen basket, let's start with the yen. You can see that we broke that moving average here. So at this point, I wouldn't be surprised that the yen kind of stays weak. Look at that little low base here. This is not a good sign after a big fall. Usually that's what we get. We get a big fall. We get a sideways price action. And the thing is that we can consolidate for a little bit before we turn lower. Dollar is a good example. After a big fall over here, look how long it has been that we have been going sideways. So the way kind of closing today is right below this level here. So at this point, like I said, I like both the dollar and the yen short. Seasonal patterns sort of support that. So let's not bother taking a look at a lot of European currencies. Let's just jump into the Aussie and Kiwi because those are the two currencies that are moving. Those two currency baskets are moving nicely. Look at the daily chart there breaking out. So this is again where the money wants to go. I don't want to short dollar or the Aussie or the Kiwi for the next few days. Again, that's just a trade that we have right now. So if you take a look at Aussie USD, look at that. We've got a beautiful break over here. At this point, it looks like it wants to continue higher. But look at that consolidation it's coming out of. So usually, big consolidation, you gotta run up and then get a consolidation again. That's just the way the price action move here. And same thing with the Aussie yen. We got a nice little break here. We got sideways here. If it does break above that 97.50, I want to be jumping on that one. But again, the big question here is that how long you want to hold that trade for. And again, we are in this holiday period where a lot of people are checked out. A lot of people just don't want to spend too much time in front of the screen. And I personally am a big advocate on this. Let's not spend too much time behind the screen. We are not expecting a whole lot of market moving events. And this is where, wait till January and then market gets active again. And especially until Christmas, as we are a few days away, I think it's best to sort of keep things on the sideline and just wait for the next big opportunity. We can time trades around these events. We don't have that anymore. So we just have to go with the market sentiment and just trade what's moving and be on the sideline, but nothing is moving. So, take this time to review your year, review your trades, and come back strong as the next year starts. So for now, make sure you're preserving capital. You want to trade, maybe have a position size on. But yeah, this is the time not to be too active in the market. So that's where we are at. We'll continue watching the markets. We'll see if something is worthy to jump on. But outside of that, let's be on the sideline. Thanks everyone for watching, and we'll see you in the next update. Cheers.